Welcome to Subramani. This is a little. This is a video about another profession which is very much like the investment profession. That is the medicine profession. So I have this friend, and she's a very good gynecologist. And I asked her what is the toughest job that she does, in the sense that what is the toughest portion of her work. And very surprisingly, she said something very similar to what any financial advisor would tell you, is to say that people not implementing what they think they will, right? So which means when a patient comes to her, could be a slightly aged patient, in the sense she's say 35, 36, trying to have a kid, and 35, 36 is not overage today, but yes, it's a little older in terms of trying to have the first kid. They are overweight, they may have some BP and sugar kind of problems, and they want to have a kid very soon, right? So they started trying when they were 32, 33, and they've come now. I'm not getting into that detail, but typically what happens is, if she says go and get these tests done, reduce your weight, take this medicine regularly, meet this specialist, get a report on this, and come to me after a month, the person doesn't turn up, or the person turns up and has not implemented 3 out of 5 things, right? Largely because they get overwhelmed when you give them a series of instructions, right? Say do this, do this, do this, do this, and then come back to me. I don't think this works with all clients. Some clients yes, many clients no. Similarly, even while investing, the clients who sound the most intelligent are the people who will make you believe that they understand what they are doing, they understand why you are doing what they are doing, and how they have delegated between husband and wife, both know what is happening, and they end up not doing it very sensibly, right? So they think that they need to keep some cash, so they keep some cash. There is some illness, so that cash is used. Then they never get back and say what they did or things like that. So communication could be a problem even for some very intelligent investors, right? So to become a better doctor, she explained that she spends more time on the patient rather than on the illness, to find out why the illness was caused, what happened, right? So which means you spend a lot of time in doing the investigation, which is the diagnosis, because diagnosis is not only of the illness but of the patient also. How will the patient react to facts? How will the patient react to being told, look, you're overweight, you should not have a kid? How to have a kid, you need to reduce your weight by 10 kilos. How telling the husband and the wife on the while sitting there for counseling, to tell them how much risk they run, how there could be a death on the operation table because of the risk that person is taking. Now when you tell all this to the patient, the immediate reaction of the patient is to say, let's change the doctor. Instead of wanting to reduce weight and all you call the painful thing, they say rather let's change the doctor. Now similar things happen even in investing. People say, oh, this man is saying too many things. He is saying you will get only 12% return in equity, or he will get only 11% in equity, or the markets can remain at the same level for 10 years, right? And he talks about 10-year packets, when 10-year periods when debt has done better than equity. No, I don't want to hear these things. I want to hear somebody who says you will get 20% return, and this is how you should invest your money, and it will double in 3 years, 4 years, whatever, right? So I want that kind of thing. Same thing with doctors also. So she was telling me, when you tell a doctor that this medicine has to be had pre-breakfast, has to be had post-lunch, and this is to be had post-dinner, then very rarely does it get implemented perfectly, unless that person has got hospice or is in the hospital. In the hospital, very good chance that the whole thing will get done properly. But when the patient goes home, the patient forgets which is the medicine to be had before breakfast, which is to be had after lunch, which is to be had after dinner, right? So implementing it is very difficult. So a client who sounds very smart, who thinks he knows the difference, finally you find that he or she does not know the difference between a growth plan and a growth fund and a growth option, right? They don't know some of these differences. So but the way they talk, the way they pretend being very smart, that's not the way to do it. So what really distinguishes a young financial advisor with an older financial advisor is the young financial advisor has all the answers for all the questions which come from a textbook. What is the NAV of this fund? What are the top 5 holdings, right? All those answers he or she will have. But the more important question is to find out whether this client will listen to all that you say. And it is also important to tell the client, as a financial advisor, look, I'm also trying, this is a relationship which is getting built. It may take some time, but please communicate properly. When I tell you to stop one fund, there is a reason why I am telling you. Or when I tell you not to stop a fund, or when you just go on in one fund for 15-16 years, there is a reason. But after 15-16 years, it may be possible that I may want you to switch. Or if you have said that you want liquidity, and then it is your job to come back to me and say, now you don't need the liquidity, you have taken up a new job or something like that has happened, some change has happened in your life. It is incumbent upon the client to communicate with the advisor as much as it is for the advisor to communicate with the client. So these are the reasons why some relationships don't get built, some portfolios get built, some don't get built, because of simple communication problems, right? And it is difficult for the advisor to know who will listen and who will not listen, because the people who sound very smart are the ones who you think will listen, but these are the people who will not listen, or who will do things without telling you. Or suddenly when you are going through their bank statement for doing their income tax work, you realize that they have some insurance policy which you didn't know about, and they are very sheepish about it, saying, oh, the bank forced it on me. But you miss that claiming that ATC deduction, right? Because you didn't communicate. Because communication is not just sending the information, it is also highlighting, it's also saying, look, I have this policy, look, ATC has to be claimed, look, ATD has to be claimed. This is in a slightly different context. I was in a CS office when I realized that these kind of mistakes also happen. So the quality of advice that you get depends on how reactive you are, how understanding you are, and what you also do with the advice, right? If you don't use the advice well, or if you keep listening to the advice and don't act on it. For example, today, because of the taxation rules and dividend being taxed in your hands and capital gains not being at zero, it makes sense to have more entities. Maybe you should need to have a HUF, maybe you need to have an AOP and things like that. So should you do it, should you not do it? It is a time for you to sit with the financial advisor who understands investment and taxation and decide how the whole thing is to be done. Can it be done? Why can it be done? How can it be done? Will the UCC remove the HUF? You need to have answers to some of these questions, but you have to ask these questions. A young advisor may have answers to some of those questions, but he or she may not have answer to some of the questions of how you will behave when the market tanks, right? How you behaved in March 2020, how you will behave when you lose your job, how you sound very smart, but when your employer was not paying you salary for 3 months, 4 months, you didn't realize that you are not going to be paid for that period and you had already lost your job, right? So there is this simple gap of being a good investor and running a good investment firm. It's not a very simple thing, because it's like a very talented person like a Kapil Dev, or maybe a Rahul Dravid, maybe not Rahul Dravid, a Kapil Dev or a Sachin Tendulkar trying to run a coaching business or trying to coach. Very difficult for them, because they can't understand why. I mean, if I can do it, why can't you do it, right? That's the kind of questions which they ask. But again, it's a question of you do not know what to put first. Should you give good advice and see how the client is reacting, or you see how the client is reacting and then give good advice? And how do you stay on in the relationship? You keep testing the advice, you keep talking, you find out what is happening. That is, initiative has to be from both sides. But you don't know how the client is going to react. When he sees trouble, will he flee, will he stay on? Will his health problem impact the investment, not impact the investment? Will his wife decide on what is to be done? Will he decide on what is to be done? With all these conflicting angles to any problem, it's very difficult to decide on these kind of relationships. So what the doctor said makes a lot of sense, that you don't know how the relationship will go on, because if you can give a complex set of instructions, some clients can understand, many clients can't understand. So for some people it may be a very simple thing, saying, okay, I have created this link, go and add to the biller, do this investment, give me quarterly statements, let me do your estimate of advance tax based on the GST that you pay, or based on the capital gains that you are making on a quarter to quarter basis. So every quarter when we will have a look at your capital gain and pay the advance tax accordingly, right? So some people may need such detailed instructions. Some people will just say, oh, estimate your advance tax on your dividends. You have about 2 lakhs of TDS, but since you are in the 30% slab, you have to pay another 2 to 3 lakhs of advance tax for the dividends alone. Then the capital gains that you make, let us pay the tax quarter on quarter. So give me the quarterly P&L. Right? So you want details in very specific reasons. Some people you can just say, sir, estimate your advance tax and pay. For some people you would want quarterly details and all that, and say that, look, 4,45,000 is the advance tax that you have to pay, or 7,28,000 is the advance tax that you have to pay, because this time capital gains tax is higher, right? This kind of thing. Now, as an advisor, put yourself in the client's shoe and decide how much the client wants, and ask the client, do you want detailed instruction? Will you come back to me every quarter saying what's happening? Will you want me to come back to you every year? Will you want me to come back to you every 2 years, 3 years, right? Let us not have surprises saying, oh, I thought the relationship was going on well, but something seems to be not happening, right? That happens largely because of communication. Thank you.